Hello out there, John Hardy here with the FX update on this Monday, February 14th. Title of our presentation today, FX update today, is Eurodollar on the brink. We went right to the brink today. Didn't quite cross it. We've seen a bit of a bounce. Let's see what's going on. If we look at why the euro has been a bit weaker, and it's not just versus the dollar, but it's been quite weak against sterling and some of the other currencies today. We have a lot more noise on the Irish election, with Fine Gael getting, I think it was 38% in the latest polls. It needs something like 40% for a majority government. I think we can assume that they're going to be able to form a winning coalition. But their words, according to a Wall Street Journal, some source within the Fine Gael party saying that if a new deal couldn't be hammered out on the debt, that they would look to go for a restructuring solution. So obviously this affecting the whole sentiment towards the pigs. We've seen spreads a bit wider. This has not been a dramatic effect though, and we've basically been seeing the spreads heading just sort of gently wider day after day lately, whether it's Italy, whether it's Portugal or Ireland. So so a bit of a negative drag from that source. We also have the after effects of the Weber departure. Wrote a bit about that in this morning's FX update. Won't go into more detail here. There's plenty on that. I think the interesting thing being this guy was an awfully bright star, and his not wanting to continue down that road towards the ECB presidency, which I think was his, suggests that perhaps he thought it was going to be a failed mission, or a failed, if not a failed institution. So consider that. Bond auctions this week, those are a bit hard to judge because of the lack of a free market with the ECB in there buying. And I already mentioned about the spreads today not favoring the euro so much. A little bit of disfavor in the Eurodollar as well. From the front end of the curve, we had Euribors rallying a bit more sharply than the Eurodollar. Eurodollar stirs, that is. Of course, Egypt rally. We saw that on Friday. Saw quite a comeback in emerging markets. Saw some follow through in Asia to open this week. And again, like I said last week, I mean, if we only had a one-day sell-off because of the entire Egyptian situation in the first place, there's nothing really to price in or out, save for perhaps a one-day rally. Now that the situation is reaching some kind of solution for now, but of course the longer-term questions remain. And also on the risk aversion front, the idea that the revolutions are spreading, that there's some kind of contagion here. We've got protests in Iran, Algeria, and I think especially, even though it's a tiny country, the situation in Bahrain, getting awfully close to the Saudi heartland there, and that is seeing London oil anyway, London crude, Brent crude, quite a bit higher today. You have to wonder at what point higher crude prices are going to put a lid on this risk appetite rally in developed markets, which seem to just be squirting higher and higher and higher. I think it's getting really scary there, but we'll get into that in a minute. U.S. budget process, everybody shield your eyes. This is horrible. Nobody's talking about the real issues, the degree of reductions that are needed to really iron out the situation for the U.S. going forward, and it reinforces the view, as I sent out on Twitter, as I tweeted earlier, that really the only way higher for the U.S. is through risk aversion and some unwinding of structural dollar shorts, because the political situation, the inability again to honestly talk about and straightforwardly talk about with the voting public the degree of the problems of what needs to be done is a sign that not enough is going to be done for the longer term. On dollar techs, we had some good signs for the dollar for a follow-up on this rally, but another cross is still lots of doubt, no major follow-through across the board. And again, we're on the brink here in Eurodollar, but we haven't gone through the key level around 134.30. We'll get to the charts in a moment. For now, I want to follow up on the written stuff here. And if we look ahead, what are the big event risks? Tonight we've got the RBA minutes, very key, after we had a Stevens testimony before Parliament, where he seemed to be suggesting that they're a bit more satisfied on the current rate level, and lending was, I don't remember the exact word, but the lending market was not exactly booming, and this is going to be either needs to be underlined or rejected from the RBA minutes. It feels like Aussie dollar needs to break one way or the other very soon. China CPI, that's also out. manufacture your own CPI data point here. Basically, we can expect, I think, a high number. And the more important thing going forward is how China is dealing with inflation there. Tomorrow, Riksbank, we have the Swedish Riksbank as the central bank with the most forward rate hike expectations priced into the market. We'll show you a couple interesting charts there on how EURUSD, for example, is priced. That's the biggest, most traded stocky cross. UK CPI, also very important, but even more important is the Wednesday quarterly inflation report. And this has been an ongoing debate for a long time now. How long can the Bank of England continue to look through these higher inflation levels? Market getting pretty aggressive on looking for Bank of England hikes coming in the year ahead. I believe I'd have to consult my morning report because I looked it up this morning, but I believe it's above 80 bips already priced in. So next 2 days really going to be key for sterling crosses, and of course cable flitting back and forth at that 160 level, and euro sterling at some interesting levels. We'll get to the charts again in a moment. The German ZEW, which has not rebounded as much as the DAX, that's for sure, and sometimes leads, although in a very inefficient way, what's going on in the equity market. Certainly the economic growth potential as measured by the survey doesn't seem particularly encouraging. And so you have to wonder why the DAX is trying to make a go at its all-time highs. Still quite off those highs, of course, from way back in 2000, but still an incredible run there. U.S. retail sales also out. I'm very curious to see that release. We saw some anecdotal reports of pretty weak spending numbers, I recall, back in January. So let's see what that data point brings us. And of course, Irish elections are next Friday. That's a daily thing to follow, the poll results, etc. And most important of all, in terms of a more cyclical, structural data risk, we have the March 3rd semi-annual Humphrey Hawkins testimony from the Fed. Okay, let's go to the charts here, and we will start with euro dollar and not euro sterling. Interesting with the move to the sort of final shorter term structural support level here, the 134.30. This was a low here, served as resistance once, had a false break here, and served as resistance twice again before it finally broke, and now we're looking at it again. We need to either see the dollar making a stronger comeback on risk aversion, or we need to see a more convincing either interest rate expectations being unwound in the Eurozone or pig spreads heading more convincingly wider, I think, to get a sustainable break below here. But that's a very key level to watch here. Small tactical level we had on the day at 135, so tactically looking at that, necessary to hold there. Just to remind you, on the weekly, we've seen 3 weeks of interesting candlesticks with the upper shadow quite long here, suggesting that it's really having a hard time getting any kind of rally going. So the pressure very much to the downside, but we need to see a knockout blow here on the euro dollar. Euro sterling, interesting levels coming up here, low 84s, high 83s, whatever this low is here. And interestingly, if we go out to a weekly level, we've got a huge trend line coming in, and the 200-week moving average as well. Now, we've been in a range for quite a while, so there's some wood to chop, but this is interesting for the longer-term picture for euro sterling, and we tend to favor lower levels in euro sterling as well. Euro Swiss, a key day. It looked like we wanted to take this pair up to the 130, the 200-day moving average after the first test of this line break. Now we're coming back lower again. Have a bit of an evening star formation here, although without a proper candlestick to initiate that. And I think what we have to look at there is if and it wouldn't have been in an absolutely tiny range for over a week now, but if they somehow put on a rally, if we get interest rates headed lower, then I think we're very much in danger of this sequence failing here, this new high failing, and some kind of retest. And this has been a bit of an ABC wave structure here if you're looking at Elliott wave. So possibly a throwback, but I think we'd need some support from interest rates, because Swiss has been trading a bit like a currency carry trade versus because of the moves, the focus on interest rates lately. Euro yen, similar to Euro Swiss, it's coming off on the weak euro, and some signs of stability in interest rates, and with the Euribor as well. Let's say the March 12 Euribor rallying quite strongly the last couple of days. That's helped to bring the pair lower. 200-day moving average, the black line there you see there. On switching to the dollar now, dollar yen, this 83.69 high is very critical for now. Again, just like with the other yen crosses, we need to see some follow through on interest rates. The short end of the curve suggests that we should already be testing a 200-day moving average, so it's kind of interesting to see this divergence, and it either A suggests that this is leading, that the currencies are leading the rates, or the other way around. That sounded like nonsense. Basically, you have priced in that it should be higher, but it hasn't headed higher, so it's an interesting divergence, and we need to see what happens here with interest rates. I think we could be in for a surprise and a reversal if we see some more dovish talk out, or if we get a huge risk aversion move, and that being accompanied with a rally in rates. Let's see what happens there. Elsewhere, finally, on the charts here, actually not finally, we've got quite a few more to go through. Aussie dollar, I would like to take a look at that one in a bit more detail in a moment, but a lot of uncertainty here. We came back lower through the support level, and we've been testing this 55-day moving average. RBA minutes, I think you're going to shoot us back down into this lower part of the range towards the 98.50 area, or it's going to put us back pushing that 102 level soon. And of course, we have some upside pressure from risk appetite, and copper suddenly rallying like mad. I think it was close to the all-time highs again today. Silver also rallying, so that's some upside pressure there. The currency pair looks somewhat fairly priced versus interest rate differentials. So again, the RBA minutes are going to be key for direction in the Asian session tonight. Cable 160 waiting. We're going to either go much higher or much lower, I think, and by the end of the week with the Bank of England inflation report, either underscoring the predicted move higher by the Bank of England in rates, or rejecting it. So really quite a pivot point there, I think, for cable. Dollar Canada not getting a lot of follow through. We have Brent crude higher, but we have West Texas Intermediate crude lower, and as was mentioned last week, this huge bar here only resulted in minor downside. I think this is really having a hard time getting momentum going to the downside, and interest rate spreads being one of the factors there. So, but still though, on the upside, we definitely need to take out parity before we even talk about getting a rally going. EURUSD, somewhat interesting, grinding lower and lower and lower. 10-year low in EURUSD from the weak euro, and because the stocky is sort of a star with its huge export economy, lack of sovereign debt issues, etc. It has a bank expected to hike by another 100 plus bips in the coming year. Kind of interesting though, if we look at, oh, and before I go off this chart, we saw this this bar here, this strong bar lower here, was the initial break lower after the last interest rate decision, which made it clear that they're looking to hike rates further. If we look at the interest rate differentials on euro versus the Swedish krona, it's a bit interesting that we've seen spot, which is the red line, headed lower and lower and lower towards this multi-year, a decadal low, in fact, below 880, that the interest rate differentials aren't quite at new lows yet. So let's see what kind of direction we get off the Riksbank. I think it'd be very interesting for certainly some sharp short-term consolidation if the bank has any kind of rhetoric related to the strength of the Swedish krona. Nothing to suggest it will. I just think the market would be deeply shocked if that happened, and we could see, again, with this being the case, that it's pricing in more than the interest rate market is pricing in. We could see some extra volatility off that announcement tomorrow. And in emerging markets, this bearish candlestick not seeing follow through today, a bit interesting on that account. Let's see how emerging market equities do in the next couple of days. There's been a massive divergence there with weak emerging markets versus the major developed markets. I think a caution sign on the overall risk appetite picture. That's not a chart I want to show you. This is the Australian dollar versus US dollar chart. Pretty cool to see the kind of patterns we've seen lately. We saw this false break at the beginning, or just before the beginning of the year, to new all-time highs, rejected, and we saw a perfect 618 retracement to this 10087 level here. got a couple hundred pips of downside, but then it failed to follow through, and this time sort of expiring or running out in here on that move, and then it headed higher, neutralizing the move. And then we've seen a new sell-off below the old, again, this the 10087, a nice retest overnight. Fibonacci-wise, not really a clean-cut scenario with it going to the halfway point. And then as a microcosm of it, just to see how this, to show how this works, we see the sell-off again reaching exactly the halfway point, almost echoing as a microcosm of the previous move. Looking forward, looking at tonight's RBA, the final sort of Fibbo levels are going to be 101 and slightly higher for this sell-off here. If we're getting above there, that's reaching beyond the pain level of the retracements, and then you're looking to test the highs, the all-time highs, or not all-time, but whatever they are, going way, way back on Aussie dollar. To the downside, obviously, if we go back to the daily, we had that 55-day moving average as an apparent focus, even though it wasn't a focus here as much to the downside. So let's see what the RBA has to say. That's the next key event risk we have going forward. I think this is going to be a busy week with the UK-related data points, with Eurodollar hitting close to those key levels. There'll be plenty to watch out for in the coming days. And if you're still around after a 16.5-minute video, I wish you the best of evenings, and we'll get back to you tomorrow. Over and out.